Welcome to an insightful and forward-looking discussion you won't want to miss. In today's video, we dive into the mind of one of Wall Street's most respected voices, Tom Lee of Fundstrat. Known for his razor-sharp market predictions and deep understanding of emerging industries, Tom Lee sits down with CNBC to discuss his bold expectations for 2025 under the Trump administration. From the rapid rise of artificial intelligence to groundbreaking advancements in quantum computing and cutting-edge technology, Tom Lee outlines the key drivers he believes will define the next era of innovation and economic growth. How will government policies shape the trajectory of AI and tech? What industries stand to benefit the most from quantum breakthroughs? And most importantly, where should investors be looking as we move into this exciting future? Get ready to hear expert insights, actionable predictions, and a vision for how technology will revolutionize our world in the years ahead. If you found this introduction compelling, don't forget to subscribe to my channel for more in-depth discussions and expert insights. Hit the like button if you're excited about the future of AI and tech, and share this video with friends and colleagues who need to hear these predictions. Let's stay ahead of the curve together. Thank you for your support, and let's
Now, the S&P tech sector closing at a record today, and the Dow closed higher for the fourth straight day, its longest winning streak in nearly a month. Joining us now is Fundstrat Global Advisors Head of Research, Tom Lee. He is also a CNBC contributor. Happy holidays to you, Tom. Thank you for being here. I want to ask you about the animal spirits, because I was reading in the producer's notes that you believe they come back next year. What species of animals come back, and were they hibernating this year? Because we saw some species out in full force in 2024. So I'm curious which ones you think will be in full force in 2025.
What I'm thinking about with animal spirits, and it's a Milton Friedman reference, is the ISM's been below 50 for almost 3 years, meaning companies have been cautious. Their visibility hasn't been great. But finally, the Fed is cutting, and we have an incoming administration that's seen as very business friendly. And so I think companies for the first time in a long time are going to be expansionary, feel confident doing mergers. I think this is a very good environment for small caps, mid caps, the financials, and cyclicals broadly like industrial. So I think it's going to feel a lot like the market broadens in 2025. Even as tech sort of keeps up with the market.
Now, I know you are a quintessential optimist, Tom, but I'm curious, where do you see the biggest risks to that forecast for next year?
Well, there's, the big foil in 2025 is going to be whether or not there's a policy error, and there can be two sources. One would be if the incoming administration does implement tariffs that are damaging to the economy, because we know that they'd be immediate effects, or if there are mass deportations that have some unknown impact on labor markets. The other source would be if the Fed becomes too inflation-focused and allows the labor market to weaken. And so we actually slip from the Fed sort of trying to support the economy to the Fed trying to save it. I think that would be a very adverse development.
Tom, one of the big themes that we just wanted to point out for viewers and listeners out there was this idea that cryptocurrencies will still be a focus, given the focus of the incoming Trump administration. We know that you're bullish on many aspects of crypto, but I wonder if you might take us through where you see the best relative performance in that crypto landscape in 2025.
Investors, at our firm for the last 8.5 years, we have recommended an allocation to crypto, including Bitcoin or Bitcoin and Ethereum. That allocation probably should be much higher in 2025 because the regulatory landscape is actually becoming more friendly. So I think Bitcoin still has to be at the core of someone's holdings, and I see Bitcoin getting to around 250,000 next year. But that would allow Ethereum, which is around 3,500 now, to probably do even better. Ethereum could get to 5,000 or 6,000 next year, and I think this is also probably the year where there's what we call alt season, where there's things like Solana and other altcoins do extremely well.
Tom, if you feel as though, and this is, again, relatively speaking, that Bitcoin is a commodity and that some of the companies that leverage those commodities could be in play as well, much like gold and gold miners, what types of companies are going to be the ones that benefit the most from that crypto expansion if it were to hypothetically happen?
2024 has given us insights. If we look at the best performing equities that are related to Bitcoin, what we would call leveraged stories to Bitcoin, meaning that they're either acquiring Bitcoin as a treasury asset or they're leveraged to the price, have done very well. And that would be things like MicroStrategy, Semler Scientific, and Coinbase. And there are other companies that are sort of doing what Michael Saylor would call the Bitcoin standard, like Mara. But I'd say in investors' portfolio, if they're especially a large cap focus, a company like MicroStrategy, gives you really good exposure to Bitcoin.
So how will these stocks do in 2025? Let's ask Doug Clinton of Intelligent Alpha and Deepwater Asset Management. Welcome back. Good to see you, man.
You too, Scott. Merry Christmas.
So Merry Christmas to you as well. Thank you. We did tease the fact that, the stock that you think may not be at the very top of the list next year, and it's NVIDIA. Not that you don't like it, you just think others may have their moment.
I do. I think if you look at the last 2 years, Scott, in terms of the AI trade, it was all about the hyperscalers spending billions of dollars on CapEx to build out really general purpose AI compute. So that was them investing in NVIDIA's top of the line chips to train the models, the AI models that they're building. I think as we go into 2025, that theme shifts to one of custom silicon. And the reason for that is now that all of these companies kind of have built out their general purpose infrastructure, I think they'll start to leverage a lot of the custom chips that they've already been building. So Google with TPUs, Microsoft, Meta, Amazon with Trainium, they all have their own custom silicon that they've been developing. And I think they're going to be more aggressive deploying that next year. And ultimately what that means is it's good for suppliers like Broadcom, who works with most of those companies. And it could be good for companies like Marvell as well, which is another stock we own at Intelligent Alpha.
Even so, what happens at the moment that NVIDIA fails to live up to the amazingly lofty expectations?
I think that if you look at just the AI trade relative to the .com trade, people often make parallels, and I think sometimes they're useful. And in this case, you look back to the .com era, Cisco, I think, was sort of the poster child. NVIDIA is our poster child today. And it is generally, I think, a barometer of just how people are thinking about the trade. And so what I think we could see happen is at some point next year, and again, NVIDIA is still a top holding for us, but at some point I think you could see NVIDIA maybe falter a little bit. And some of these other names, like a Broadcom or like a Marvell, might pick up a little bit more momentum. The sentiment then may be that, hey, the AI trade's over, NVIDIA is done and therefore it can't keep going. I think that would be a mistake, though, because the AI trade is not just about NVIDIA, it's about many other companies. And as it continues to evolve, I think we kind of broaden out and see more companies work just like NVIDIA has the last couple of years.
I mean, do higher rates hurt the growth trade, or do they just push people back to the biggest stocks in the market like they are right now?
I think it could push people back to the biggest stocks, but also I think it will push them to some of the AI players that have the most growth potential as well. So again, if you look back at that .com era, for most of the 90s, the interest rates were 5 to 7%. The 10-year was around 5 to 7%. So well within where we are today. In fact, a little bit higher. And so there's no rule that says we need low interest rates to have technological innovation happen at a great scale. But I think if you look at what are the companies that can push through potentially higher rates or persistently higher rates than we've seen for the last couple of years, certainly it could be the mega caps. They've already shown that they can do that. But I also think you could look at potentially some software names that start to get an AI bid. Snowflake is one example, again, another holding of ours that has talked more about an AI story. And I think companies like that who can say, hey, we do have a play in AI. We're on the software side. Customers are starting to deploy us for AI use cases. They might have a case to work next year, too.
What do you like most outside of tech? We always identify you as a tech investor, and I feel like 99% of our conversations are about that sector and those stocks. What do you like outside of there?
It's certainly where I spend most of my time. But at Intelligent Alpha, we do use AI to look much more broadly than just tech. And one contrarian idea that AI has been on for the last several months, it hasn't really worked out so far, has been the energy trade. And in using our AI models to make predictions going into 2025, one prediction that AI has made is you could see oil hit $100 a barrel. I don't think anybody has that on their roadmap, and so it's certainly contrarian. If it happens, I think the oil trade or the energy trade in general probably works in a big way. But stocks like GE Vernova, not dependent entirely on oil, but I think in terms of infrastructure build out, green energy will continue to be a theme, and then Schlumberger are two that are larger holdings in our portfolio currently.